The US just flipped the script on stablecoins, and a single crypto project might secretly be running the whole show. Now I know that sounds crazy, but stick with me here. Donald Trump signed a law that could make Chainlink the unlikely hero of American finance. And yeah, you heard that right. The very same Chainlink that supplies those little crypto price oracles. Now this story has a twist that you won't see coming. So there I was this morning scrolling through the news on my phone, coffee in hand, not expecting much. Someone on our Discord, that's the free educational community, the link is in the description, had posted, yo, have you seen this stablecoin law that has just passed? Next thing that I know, I'm neck deep in an article about something called the Genius Act. And let me tell you, for a crypto nerd like me, it felt like stumbling upon a secret plot in a movie. This US law basically gives a green light to stablecoins, but with a ton of strings attached. So as I kept digging, I realized that those strings could lead to Chainlink becoming the backbone of, well, pretty much the entire stablecoin universe. So by the end of this video, you're going to see why Chainlink might be quietly powering the future of digital dollars, and why nobody is really even talking about it yet. And trust me, this is one wild ride through the world of crypto and regulation that you won't want to miss. All right, let's set the stage. The Genius Act, and ironically named law, is, at least if I ever kind of heard one, that is, just got signed into law by President Trump. And no, this isn't some sci-fi script. It's actually happened in late July 2025. Now, the thing is, historic, right? The first comprehensive federal framework for stablecoins in US history. Basically, Congress finally said, okay, stablecoins, here are the rules of the road. Now, why should anyone care about that? Well, it's because it means that stablecoins are officially legit in the eyes of the US government. We're talking about those digital dollars like USDC or USDT that crypto folk use every single day. They now have an official rulebook. And what a rulebook it is. The Genius Act lays down strict licensing rules for anyone issuing a stablecoin. You can't just spin up a My Random Dollar token in your garage without approval. In fact, issuers have to be issued banks or, authorized entities. Now that's right, banks can legally issue and custody stablecoins now. Imagine JPMorgan or Bank of America launching their own stablecoins. That's on the table, by the way. Now, the law also demands that these issuers hold 100% reserves of every coin in circulation. No more risky business of maybe kinda sorta backed. It's one coin, one real dollar or treasury bill in the vault. And get this, right? They have to publicly disclose their reserves monthly. So every month they need to basically say, hey, everyone, here's proof that we have the dollars to back up all of our coins, or they get in trouble. On top of that, they have oversight mechanisms, audits by third parties, and all kind of consumer protection rules. Nefarious actors, fake guarantees, and shady practices? Not going to fly anymore, at least in theory. Now, as I'm reading this, a question pops into my head. How on earth are these stablecoin issuers actually going to prove that they're following these rules? Sure, a law can require things, but in practice, how do we trust that, let's say, a big bank's new stablecoin is actually fully backed by every single dollar every single day? Well, are you going to take their word for it? Good one. I wouldn't even take a random crypto project's word for it, let alone a bank that might actually have every incentive to, right? So, fudge those numbers if they could. There's got to be a mechanism to verify all of this, right? And ding ding, that is where Chainlink starts creeping into the picture, though I didn't realize it immediately. So at first, I just kind of hyped about stablecoins getting clarity, like that's a big deal. Regulatory certainty means these heavy hitters, think big institutions, hedge funds, fintech companies, can now jump into stablecoins without as much fear as the SEC, or at least fear of the SEC, or whoever's kind of smacking them down. It's kind of like the government has built a sandbox and said, okay, you can play with this now. Now, we're going to see if the US banks legally holding and even issuing dollar-backed stablecoins, which even a year ago would have sounded unbelievable. So yeah, institutional participation is about to explode on a stable regulatory footing and all of that. Great news, right? But here is the rub. The regulation comes with responsibilities, right? These banks and companies can issue stablecoins, but they must meet strict reserve backings and audit requirements. So the law's not just about a free pass. It's more like you can do this, but you better do it right or else. So picture those kind of suits and ties bank executives now sweating about how to comply with rules about monthly public reserve reports, real-time oversight, and making sure that their stablecoin can integrate with the wider crypto ecosystem, because the law also pushes for interoperability, which I'll get to in a sec. Now, they're entering a world of crypto that moves at the speed of light compared to traditional banking. They're going to need tech solutions to keep up with all of these requirements. Now, enter Chainlink. If you've been around crypto, you probably know Chainlink as the decentralized Oracle network that provides pricing data for smart contracts, like how your DeFi app knows the price of Ethereum. Odds are that it's actually Chainlink under the hood. Without Chainlink, DeFi just wouldn't exist. Now, I'll admit, a while back I thought Chainlink was some kind of niche, important, sure, but not exactly front page news material. Boy, was I wrong. It turns out that Chainlink has been busy building tools that are exactly what these stablecoin issuers and banks are going to need under the Genius Act. So the first thing that kind of clicked for me was Chainlink's Proof of Reserves, POR. Now, in the context of this new law, POR is like a godsend, right? What is it? Well, it's basically a service that uses the Chainlink network of independently verifiable and publicly attested that a stablecoin is fully backed by real assets. So think of it as an automated auditor that just never sleeps. So if a stablecoin issuer says we have $500 million in US treasuries to back up our $500 million of tokens, well, the proof of reserve can check those treasuries via data feeds, APIs, and whatever, and then broadcast a confirmation on-chain that anyone can see. It's transparent and it's tamper-proof. Now, you know me, I like analogies, so here's a good one. Imagine a giant glass vault in the middle of Times Square containing all the cash and the assets backing a stablecoin, right? Anyone can see it at any time and they can walk by and they can count the money inside through the glass. That is essentially what Chainlink's POR does digitally. It makes reserve verification public and, guess this, continuous. Right? Under the Genius Act, issuers must disclose reserves monthly, but with POR, they could basically do it daily or in real time, giving users even more confidence. So as I realized this, I had a little aha moment. Chainlink built this feature years ago, initially to help prevent crypto exchange shenanigans and stuff like that. I mean, we all remember FTX and Alameda research, right? Anyway, now it's almost like they kind of foresaw this regulatory need. Now, stablecoin issuers can integrate Chainlink's POR to prove compliance with the law backing requirements without actually needing everyone to trust their accountants. It's a trustless trust, if that even makes sense. You trust the code and the math, not the company's word. So for me, that was the first sign that Chainlink is poised to be core infrastructure in this new stablecoin era. But the rabbit hole, it goes deeper. Remember, I mentioned interoperability, right? The Genius Act doesn't stop at reserves. It also talks about interoperability and transparent data sharing across different blockchains. Basically, regulators want stablecoins to be able to operate on different networks smoothly and safely. So if Bank A issues a stablecoin on Ethereum and Bank B issues their own on, let's say, the 𝗕𝗙𝗪𝗀𝗀𝗪𝗀 blockchain, I'm making that up of course, then those coins eventually actually need to interact, or at least systems need to talk to each other. Otherwise we'd end up in this kind of fragmented liquidity and a little kind of walled gardens of stablecoins that can't leave their home turf, which would suck for global digital dollar idea. Interoperability has been a tough nut to crack in crypto, right? Moving assets from one blockchain to another securely is a pretty big challenge. People use bridges, but many of those have been hacked or are cumbersome. Nobody wants to see a scenario where, let's say, you try to move 1,000 digital dollars from one chain to another and poof, a glitch or a hack eats half of them away. Regulators definitely don't want to see that, so it would undermine confidence in stablecoins faster than you can say rug pull. So, how do we get secure, smooth, cross-chain stablecoin transfers? Enter Chainlink's Cross-Chain Interoperability Protocol, or CCIP for short. So if POR is your auditor, CCIP is like the highway system connecting all of these blockchains. I like to think of CCIP as an internet of blockchains kind of cool tool, right? It's a protocol that lets different chains communicate and exchange data and tokens in a trust-minimized way. And I should say, relevant to stablecoins here, as it offers guaranteed execution for cross-chain transactions and transfers. That means that if I kind of send a stablecoin from chain A to chain B using CCIP, the transaction itself completes fully and not at all, or not at all, I should say. There's no scenario where I end up losing funds mid-transfer due to a half-executed move. It's all or nothing, which is exactly what you want for moving real money around. So to put it in a real world context, imagine CCIP a bit like the SWIFT network for blockchains, right? Or maybe like a universal translator device, right? You can have all these different blockchains, languages, and CCIP can make sure that they understand each other and obey the rules. And speaking of rules, Chainlink also introduced something called the Automated Compliance Engine, known as ACE, and at least as part of this kind of cross-chain solution of theirs. So from what I gather, ACE can enforce certain policies on transactions. So think of it as a customs agent that checks your papers when you're moving between countries, or in this case, when tokens move between chains. It can ensure, for example, that a stablecoin transfer meets regulatory compliance like KYC and AML checks, or it doesn't go to a kind of blacklisted address, right, etc. And basically, before it even goes through, it does all those checks. This is huge for institutions because no bank or regulated entity is going to touch cross-chain transfers if they can't assure regulators that it's all kosher and trackable. Now, all of a sudden, Chainlink's name is all over every single piece of this stablecoin puzzle, proving reserves so that no regulators or users are happy, and basically making sure that the coins are indeed backed, right? Enabling cross-chain transfers so that stablecoins become truly useful and not siloed, and building trust and compliance into every movement of these coins so that the big players can feel safe using them. It's like Chainlink quietly became the Swiss Army knife of stablecoin issuers. Now, I have to pause here for a second and just appreciate the irony, because a few years back, if you were around crypto Twitter, Chainlink was often kind of meme central, right? Remember the Link Marines, right? People who were memeing, I guess, lots of jokes about the co-founder and some kind of master of the universe, There were jokes about buying, Sergey neckbeard, NFTs, and all the kind of fun stuff, right? It had a bit of a cult following, if you will. And while the memes flew, these developers were in the background solving unsexy, nitty-gritty problems like data oracles and cross-chain communication. You can fast forward to now. Those exact boring solutions are what might actually drive the next wave of mainstream crypto adoption. It's kind of poetic, right? The loudest hype in crypto often fizzles, and the quiet work sometimes end up changing the entire game. All right, let's get back to the story. At this point, or by this point, I'm already convinced that Chainlink is sitting in a pretty sweet spot. But then I come across something that really made my jaw drop. JPMorgan, yep, that's JPMorgan, the mega bank extraordinaire, has already been testing the waters of this new world, and they used Chainlink to do it. I'm not kidding here. Now, according to multiple reports, JPMorgan completed its first live blockchain-based transaction on the public network recently, and it involved tokenized US Treasury bonds being exchanged for a digital dollar stablecoin in a single swoop. And guess which tech they leveraged to pull this slick maneuver? Chainlink's network, along with a DeFi platform called Ondo Finance. Now, this type of transaction was a demonstration of something called delivery versus payment, right? DVP, using cross-chain tech. Now, if you're not familiar, DVP is a common concept in traditional finance. It basically means an asset is delivered only if payment is delivered at the same time. It's the you got your thing only when I get mine, right? Simultaneously. It's principle which, basically eliminates the risk of one party kind of defaulting. Now, in this particular test, JPMorgan's blockchain unit was able to swap a tokenized treasury, a real-world asset digitized on the blockchain, for a stablecoin on another network atomically. That is, in one atomic transaction across chains. Now, Chainlink's role was crucial here. It made sure that the two different networks involved could talk to each other and that the swap happened atomically, or all or nothing, remember? So let's think about that for a second. A huge traditional bank just used public blockchain infrastructure, not their own closed JPMorgan coin network, but public rails, to do a finance 1.0 operation, more or less to make it more efficient. And Chainlink was essentially the bridge and the traffic controller making it all possible. Now, if that doesn't validate the technology, then I don't know what will. I mean, Jamie Dimon, that's JPMorgan's CEO, might not be out there kind of waving a Chainlink flag, but actions, they speak louder than words. They quietly proved that using Chainlink's interoperability, they could achieve something that merges the old finance world with the new. Now, JPMorgan is just one example. The article that I'm reading and went through kind of mentioned how Circle, Coinbase, and other big institutional players are quickly expanding their stablecoin operations now that they have this regulatory clarity. Circle's USDC might see new life. Coinbase is partnering on, stablecoins, and you can bet others will be able to join the party. Now, all of these guys will need reliable infrastructure, and if it's not built in-house, they're going to look for who's in the market, at least who's the market leader in actually providing it. And right now, that is Chainlink. It's almost like every road in this space just leads back to the very same hub. Now, you might be wondering, what's in it for Chainlink token holders? Because at the end of the day, Chainlink is a crypto network with its own token link. Now, is this all buzzing? Is all the buzz, translating to Link's price? Here's where it gets a little bit funny, in a kind of sobering way anyway. Link's price has actually been under some pressure lately. Despite these big positive developments, over the past week or so, Link actually fell by 10%. In the last 24 hours, at the point of recording, it slid another % or so, hovering around $18 as I speak. So in fact, let me check, right? You'll open up Kraken Pro on my phone and yeah, $18.50, right, per token right now. So by the way, guys, if you're trading or want to grab some Link for yourself, I personally use Kraken Pro. There's an affiliate link, of course, in the description that supports the channel here, just an FYI. So yeah, it's $18-ish. Not exactly the moon. Some analysts out there note that the big resistance level for Link is around $18.80 to $19. So in plain English, That means that price can climb to that area, and if it does break through, maybe it'll go a bit higher. But if it keeps getting rejected there, it could tumble a little bit further. Who knows? Markets are a bit weird. Now, hearing all of that, you might be scratching your head. Dude, you just explained how Chainlink is becoming a super important. So why is its token dropping? It's a great question. It's short term. Crypto price moves for all sorts of different reasons. Broader market sentiment, traders taking profits, whales doing what whales do, right? It could actually just be that this news hasn't fully sunk in, or maybe that people are in the wait and see kind of mode, or maybe it's just a classic buy the rumor, sell the news. I'm not too worried about the day-to-day price with something like Link when it's the fundamental story is so compelling. And here is where I need to be super clear with you guys. I'm not telling you to go out and buy Chainlink because of this, or any other cryptocurrency for that matter. In fact, let me drop a crucial disclaimer before we continue, because the last thing I want is someone saying that I promised them a whole host of Lambos. But this one might just shock you. I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video today is for entertainment and educational purposes only. All right, I'm glad that we kind of got that out of the way. I know how most of you already knew it, but hey, it's got to be said from time to time, especially when I get this excited about a topic, because yeah, I am excited about what's happening here with Chainlink and stablecoins, but that doesn't mean that you throw your life savings into something. Be smart, do your research, all that good stuff. So let's get back to the story. And really, the bigger picture here, right? We've got this new law providing regulatory clarity, which is like opening the gates for traditional finance to finally embrace certain crypto technologies. Now, we have Chainlink, a project born out of the 2017-2018 era, now seemingly at the right place at the right time with the right tools. It's kind of like watching two huge puzzle pieces click together, regulation plus infrastructure. Now, one without the other wouldn't accomplish much. Now, if you had the law but no tech to enforce transparency, you'd still be stuck, trusting whatever the issuer says. And if you had the tech but no legal green lights, well, big institutions won't dare use it widely. But now we have both. This kind of means, or might be one of those kind of pivotal moments in the story of crypto adoption. Sure, it's not flashy on the surface, no big ETF announcement or trillion-dollar market cap party, but it's infrastructural, right? It's down in the kind of plumbing. It's where real transformation often happens quietly. So let's play out a little scenario. Let's say it's 2026. A major bank, let's call it Bank of Alice, has launched a stablecoin because of the Genius Act framework. Corporations are using it. Regular people are using it in fintech apps, whatever. Now, Bank of Bob in another state or even in another country also issues a stablecoin, maybe a different flavor or a different network, right? Thanks to Chainlink's interoperability, Alice's and Bob's stablecoins can interoperate, and you can swap one for the other easily, or use them in unified way in DeFi protocols. And it's all because of Chainlink's proof of reserve, right? Every user can at any time verify both coins are backed by actual dollars and T-bills. And because of the automated compliance stuff, anytime any of those stablecoins move around, it follows the rules. Like if you know a bad actor is ties to use it, then the system can flag or freeze it. As controversial as that capability might actually be in decentralized purist kind of points of view, it's likely to be part of the deal with regulated assets. Anyway, in the end result, users might not even realize it, but they are transacting in a stablecoin that's bridging banking and blockchain seamlessly, with Chainlink quietly doing the validating and the messaging in the background. It's kind of like most people send emails without knowing or caring that SMTP is the protocol making it all possible. Now, from a neutral, analytical perspective, all of this suggests that Chainlink is positioning itself as a critical infrastructure at just the right time. They've essentially aligned their development with the direction of regulation, and that's a smart move, because it's one thing to be a rebel and to build outside of the system, but it's another to build the tools that the system ends up needing. It's almost sneakily subverse, right? Integrate crypto tech into the traditional system by making it indispensable for compliance. If kind of banks need Chainlink to satisfy regulators, well, then crypto just wormed its way into the heart of traditional finance, didn't it? Now, to be fair and balanced, is Chainlink the only player out there? Not necessarily, right? There are other interoperability protocols like Poly Network, Quant, Cosmos's IBC for certain use cases, right? There are other Oracle services or reserve verification methods, but none have the same footprint or proven track record in DeFi and now TradFi crossover space as Chainlink does, right? Chainlink's name keeps popping up in partnerships and pilot programs involving big names that build trust. So in tech adoption, especially with risk-averse institutions, trust is a currency of its own. And Chainlink, by delivering reliability in DeFi for years, you rarely hear about their oracles failing even when markets go haywire. Earned a lot of that trust. So at this moment, I would say that they're ahead of the pack. The momentum is in their favor. Now, another point is that the Genius Act is a US law, but stablecoins are global. Other countries are also working on regulations, like the EU's MiCA, Hong Kong's recent rules as well, right? If Chainlink becomes the gold standard in the US for stablecoin infrastructure, it's likely to be used elsewhere too. Now, we could be looking at an early stage of worldwide stablecoin networks where Chainlink is the common thread. Now that's speculation, of course, but it's not unreasonable one. So let me also quickly address the name Genius Act, because it's kind of funny and you know I love a side tangent. It actually stands for Guaranteeing Essential National Infrastructure for US Stablecoins Act. Congress loves their acronyms, so when I say genius, I'm not necessarily saying that the people behind it are geniuses. Some might argue otherwise, right? It's literally just the name of the law. And, you know, fittingly or ironically, it took some genius tech to meet the law's demands. Looking at you, Chainlink developers. Life has a sense of humor sometimes. Now, as we near the end of this story, here's my takeaway, right? We are watching the convergence of traditional finance and crypto infrastructure happen in real time. It's not loud or flashy, but it's significant. A law was passed to regulate parts of crypto, stablecoins, and rather than kill innovation, it's actually catalyzing it by forcing transparency and interoperability, which are things that crypto projects have been championing forever. Now, Chainlink happens to be positioned as the go-to solution for these exact needs, and now big players are knocking on its door for help. Now, one more thought here. All this talk of infrastructure might seem a little bit dry compared to, let's say, X token doing 100x hype. But this is the grown-up side of crypto doing grown-up things. And personally, seeing that makes me more optimistic about this space than any short-term bull run ever could. Now, I started this video telling you about how a random morning news tip sent me down a rabbit hole. And coming out the other side of that rabbit hole, I'm honestly kind of in awe. Right? Who would have thought that Donald Trump signs a law that alone is a plot twist in crypto land, given his past stance on Bitcoin and such? And that law, the Genius Act, could actually end up supercharging a blockchain network adoption, not by retail speculators, but by the very core of the financial industry. Its truth really is, you know, stranger than the fiction sometimes. Now, Will Chainlink definitely be the core infrastructure? Well, only time will tell. I'm not, clairvoyant. There are going to be hurdles. Maybe some stablecoin issuers try to do everything in-house. Maybe other standards or protocols gain some traction. But as of today, from what I've seen and shared with you guys, Chainlink's role is already significant and likely to grow. I'll definitely be keeping an eye on how this one unfolds. And if there's one thing that I hope you take away, it's to pay attention to these less flashy developments, because by the time they're flashy, it might be just too late to truly understand them or benefit from them, whatever as an investor, developer, or just an enthusiast. So to wrap this little adventure up, I went looking for the truth behind a stablecoin revolution, and I found Chainlink quietly holding up the pillars. The Genius Act set the stage, and Chainlink stepping into the spotlight, even if most people didn't even notice the spotlight was on, is a story of regulation meeting innovation. And I have a feeling that we're kind of feeling the ripple effects, or should I say link effects, for years to come. It's pretty wild, right? And if you've enjoyed unraveling this crypto story with me, then hit that subscribe button and join me for the next crypto deep dive into the world of crypto. You won't want to miss what's coming next.